Welcome back. You're tuned into Market Fatafat, where we are taking you through all the buzzers in trade today. Let's get going yet again. Then HDFC Bank is a name that's in focus today. In fact, it was trading with gains of 1.7% in the morning trade. It's still up 1.3%. A big heavyweight in the Nifty that was really, egging on Nifty in the morning. That is on the back of a brokerage note by MK on HDFC that is retaining a buy with a target price of 2,100 rupees per share. And they feel that the bank deserves a safety premium given healthy ROAs and provision/capital buffer. And the management has reiterated its unwavering focus on customer satisfaction, arresting employee attrition, upgrading its tech, and reducing regulatory friction. Also, they plan to cut their LDR to pre-merger levels, which is around 85% from the current 100% by cannibalizing the credit growth and accelerating the deposit growth. And the bank should grow at a subsystem level of in FY25 and mimic the system in FY26 and outperform in FY27. That's what MK says. And bank is proactively reducing the unsecured loan growth earlier on, but would be open to quality loans as others take a back seat. Now, the falling LDR and higher COF could put some pressure in the near term, but margins are expected to inch up in the long run, led by better portfolio mix, lower share of borrowings, and on the back of that, HDFC is in focus today.
Okay, so HDFC Bank doing pretty well for itself in today's day on the back of that brokerage note and keeping the Nifty afloat. So today seems to be the day of the large caps because the broader markets are putting some pressure on the Nifty for sure. But let's move on, talk about Interglobe Aviation. Now, this stock is in focus on the back of a brokerage note coming in from Elara Securities this morning, and they've upgraded the stock to a buy rating. They've also hiked the target price to 5,309 rupees per share. They believe that the demand is set to jet as airports and fleets spike expansion, and also expansion at major airports will be driving growth. There's no possibility of oversupply beyond FY28 is what Elara is flagging off. This is a large positive coming in for Interglobe Aviation. They also believe that the large orders will drive the fleet addition, and return to the Pratt & Whitney fleet from Q4 is also going to bear well for the company. That could cause some near-term edge, but then that's going to be something to watch out for. Other than Elara, you also have Nuvama that's come out with its view, but that's slightly contrasting to what Elara had to say, because while Elara has maintained their buy rating, you have Nuvama that's maintained a hold rating on the stock. They believe that there's also an overhang of the promoter sell-off that we've been seeing recently for Indigo, and Indigo is 103 out of 109 rank according to the Air Health survey, indicates huge room for improvement is what Nuvama is saying. But nonetheless, the Elara note seems to be working its magic on the stock, because that stock is almost trading with gains of 2% rather. So high flyer in trade is indeed Indigo today.
All right, moving on from Indigo then to NTPC Green. Now, this stock is in focus today because NTPC Green Energy has signed an MOU with the Department of Industries, Government of Bihar. The MOU outlines a framework of significant investments in Bihar to establish renewable energy projects, including ground-mounted and floating solar installations, battery energy storage systems, and green hydrogen mobility initiatives. And on the back of this MOU, NTPC Green is in focus today, trading with gains of over 1% right now.
Okay, NTPC Green Energy also doing rather well. Gaurav, we've picked out JSW Infra for us. I believe it's on the back of a brokerage note. Tell us what the note entails.
JSW Infra is in focus, and the reason being that now DAM Capital has initiated on the company with buy rating and a target price of 400 rupees. What they're saying is that they have highlighted a few new updates from the company. They say that the recent acquisition of Navkar Corporation could mark a tectonic shift in the business model of the group, and at the same time what they also believe is that the company has a robust group cargo visibility and also an opportunity for cross-selling to third-party clients. Now they believe that company is going to become an end-to-end port-related logistic player, and on back of this they are expecting ROIC to remain at 19% over the next few years. At the same time, they also believe that strong and well-capitalized balance sheet could actually ensure leverage ratios to remain under check for JSW Infra, and that is the reason why they are being bullish on the company. And as a result, we are also seeing the stock is up more than 1.5%. So definitely watching out on this counter on the back of the positive note from brokerage.
Positive view from DAM Capital on JSW Infra. That stock doing pretty well. Let's move on, talk about a stock that's been in focus today ever since the opening bell, and that is Fortis Healthcare. Fortis has acquired 7.6% equity stake, which roughly translates to 59.7 lakh equity shares in Agilis Diagnostics Limited from the IFC, which is the International Finance Corp. The rate at which this transaction has been done is 719.2 rupees per share, and the total aggregate cash consideration comes up to 430 crore rupees. Now, the private equity investors of Agilus Diagnostics have also exercised their put options earlier this year, and Fortis has agreed to acquire the remaining 31.5% stake from them, taking the total holding to 89%. Now, other than stake from IFC, Fortis will also acquire 15.86% stake from NYLIM Jacob Palace India Fund 3 LLC and the remaining 8% stake from Resurgence PE Investments Limited. At the current deal price, the company will have to spend roughly 1,350 crores for the remaining 23.91% stake, and the deal values Agilus at 5,650. After this, 10.8% stake will be with the other minority shareholders, and the remaining chunk, the majority chunk, will be transferred to Fortis Health. So that's the contours of the deal, and on the back of that news flow, this stock is not doing all that much, but nonetheless trading with gains of more than 0.5% right now.
All right, coming to you, Sameet. Thank you so much for joining us now. Sameet Chavan is joining us on the technicals. Hi, Sameet. Sameet, you've picked out JSW Steel for us. Now, the entire steel, counters are in focus today on the back of that, DGTR investigation. A big relief coming in for steel companies if this has to go through. But JSW Steel, hasn't really done anything in the last 6 months. It's been in a consolidation mode. From here on, do you see now the stock moving now?
See, in the first half, we had seen some, relief in this counter on the back of this positive news flow. But in last half an hour, suddenly we have seen a sharp sell-off coming into all metal counters, and JSW Steel, which has retraced towards its important cluster of 945, 950. Precisely this, sell-off started from this important resistance level. So now, going ahead, 9 and 10, which is the Friday's low, would now be seen as a make or break level, because the stock is now trading around its 200 simple moving average, and as you rightly pointed out, it has done nothing in last few months. So overall, the short to medium term trend is negative, and once the stock slides below 9 and 10, 900 on a closing basis, we could see this weakness extending towards say 880, 860 kind of zone.
Okay, so that's Sameet's take on JSW Steel. Gaurav, coming back to you now. Mascot Dock is a stock that you've picked out. Tell us what the news flow is and why is the stock reacting the way it is.
Mazga Dock is in focus, and the company has now delivered its first stealth frigate of Project 17A class ship and the fourth stealth destroyer, Project 15B class guided missile destroyer to Indian Navy. Now this is actually one thing which is actually is working for the company, and other than that there is another trigger which is the reason why Mazga Dock should be in focus, and the reason being that Mazga Dock has now actually announced their share split. This is in the ratio of 1:2. So every shareholder who has Mazga Dock shares will get 2 shares of the same company, and the record date is set at 27 November. So this is another trigger because of which Mazga Dock is going to be in focus. At this moment, we are seeing some kind of pressure because of the overall market scenarios, but overall a positive news flow coming up for this company, and on back of this we will be watching out on what happens in Mazga Dock.
All right, moving on from Mazga Docks to Sameet, Exide Industries, another counter which has been in a corrective phase for the last 6 months. Tell us from here on, how does it start moving, and what are the triggers, and of course, what are the levels that you're penciling in?
In fact, the entire auto space has been, has started the phase of correction few months back. And if you see, most of the auto counters are correcting continuously since last few months. So Exide being the auto ancillary space, the stock too corrected along with the most of the heavyweight auto counters. Stock is now challenging its major important support level of 410, 412. Once the stock slides below this, then you could see the stock going back to its previous important of 350. So we don't see any major support between 410 to 350. So it would be important to watch out how the stock behaves around 410, considering the overall its price behavior in the recent past and the kind of sell-off we are seeing in the broader market as well. Once the stock slides below 410, we could see another 10% correction.
Okay, that's the take coming in on Exide Industries. Let's move on. Talk about a stock that's been in focus today as well. And NTPC Green Energy was a stock that Ankita spoke about with their on their collaboration with the government. And you also have NHPC that's in focus on the same news flow coming in for the Bihar government, because India's largest hydropower company will invest 5,500 crore in setting up a 1,000 megawatt solar power project in Bihar. Its chairman and managing director Raj Kumar Chaudhary said on Friday the firm signed an MOU with the state government for the investment at the Bihar Business Connect 2024 Investor Summit, and the company has almost 7 gigawatts of operational hydropower plants and 9.3 gigawatts of capacity already under construction, according to its website. Now, Chaudhary said that NHPC is also proposing to set up a small solar plant, electricity from which would be used to make green hydrogen. So, ambitious plans coming in from NHPC in collaboration with the government of Bihar, and the stock was doing pretty well earlier in the trading session. Seems to have tempered down slightly from there, but nonetheless 0.6% higher is where the stock is trading right now.
All right, moving on then from NHPC to Amara Raja, Sameet. Again, a counter which has been correcting in the last 6 months. It hasn't really done much. In fact, it's down 15%. Tell us from here on, what are the levels that you are penciling in for this counter? Is it time for it to start moving now?
See, clearly the price behavior as similar as we witnessed in Exide Industries also. In fact, Amar Raja has broken down below its important cluster of 1118, 1190. The similar, swing low for Exide was around 410. It has not broken that, but Amar Raja has slipped below its important support zone, and now the next important level to watch out for would be around 1100, 1080. So overall, yes, the short to medium term trend remains on the negative side, and any bounce back is likely to get sold into. On the upside, if you see now 1220, 1240 would now act as a very strong resistance.
So that's the view coming in on Amara Raja Energy. Before we keep it going with market voices as well as all the stocks, let's quickly just pull up the Nifty, because we need to take a look at what the Nifty has been doing. There's been quite some fall coming in on the Nifty in the last 10 minutes or so, a roughly 200 point fall coming in. We are still trading with gains nonetheless, but we have also slipped below that 23,700 level. Once again, it's not looking very bad right now for the Nifty, if you could put it that way, but nonetheless there has been a 200 point fall coming in. Nifty mid-cap, however, also has been declining and just holding on to the green barely by the skin of its teeth. Small cap continues to languish in the red, but remember, half an hour ago this index was down 0.3%. Slight recovery coming in on the small cap index, but nonetheless not looking so shaky right now for the Nifty. So we have about an hour of trade left. Let's just buckle up and see where the Nifty heads going ahead as well. But let's keep it going with the stocks that we were talking about. And Sameet spoke about Amara Raja Energy, but we also have Sridhar Sivram's voice weighing in on this entire space, because he is not so bullish when it comes to solar and wind and thermal. They seem to hold some appeal to Enam's holdings. Sridhar Sivram also shares what his rationale is. Let's go across and hear out his take.
Solar, because I think it's an arbitrage of the duty structure in India. I mean, the solar prices are crashing in China. There is a duties protection today, and
it's regulated.
Yeah, so it's regulated. You never know, and a lot of exports happening to US, which also is regulated. For all you know, if Trump comes and changes some duty structure, I don't like where the uncertainty is very high. If you ask me, I prefer the wind story because the number of players in wind is far lower, and India will double its wind capacity in the next 4-5 years. So the wind players look far better. Every other person or number of people coming into solar is just shocking. I would say that if you ask me that the wind part, we like power equipment anyway. This is a global theme, by the way. Now there's a power shortage which is brewing in India. Globally, there's a power shortage with EVs, with data center. The demand for power is only going to go up. Within that, I would prefer the wind. Even the thermal looks good. I mean, eventually, every power that is generated has to be evacuated. So the transmission, the transformers, everything in that segment will play out. But
Just
if you
like
ask me,
banks,
wind is where I would.
Just like in banks, you said stick to large boys. Stick to top three, HDFC Bank, ICICI Bank, SBI, because they have balance sheets. They have, I'm just breaking it for our viewers. Because big banks have balance sheet, they have brands, they have control over NPs, and they have subsidiaries which are doing very well. Can I say that in power also stick to the top 3 names? Now it could be in NTPC, it could be in Tata Power, it could be JSW Energy.
So it depends if you want to play the utilities.
Okay.
So the utilities will have only that much upside because they are regulated businesses. They will also have upside. But if you have the opportunity to play a one step lower, which is to look at the equipment guys, then your upside could be much higher. Obviously, a lot of these stocks have rallied, so you'll have to time your entry into some of these stocks. The earnings growth trajectory for the equipment guys will be far better than the utilities. Let me put it that way. Then you can figure out how to play it. But there is a story for everybody, right from the utility to the last guy standing.
All right, time now for some interesting opinion on the markets. So, will it be another year of broader market outperformance, or will the large caps finally assume center stage? Here are the opinion from Mihir Vora, Shankar Sharma, and Gautam Shah.
If we really want to participate in India's growth story in the in the higher growth segments of the economy, then we have no choice but to look at mid caps and small caps, and I think that's what the market's changing.
I am a votary, table thumping believer in small caps. I've been so for many years, and that's worked out fantastically well. Again, that said, caveat is you will in small caps find 30-40%, even 50% loss makers in your portfolio. People worry about losses in small caps. I mean, I say on the 50 you will get right, maybe even 30 you will get right. You're making out like a bandit here. So what's the problem? So my view is when markets fall, small caps fall like 2x the broad market. This is telling you something. The theme on small caps is structural.
Real estate and metals. I think the way DLF has come back, Loda Developers has come back, Shobha has been sustaining. I think real estate is going on to make new lifetime highs and beyond. And metals, I think after all the news flow that we got from China, is just setting up for a move back to lifetime highs. So these two pockets of the market, we remain quite positive.
Hi there, welcome back to Market Fatafat. Let's keep it going with all the stocks that are in focus. And Sameet, coming to you, you've picked out Power Grid for us on the charts. Tell us what the charts look like for Power Grid, because when I pull up the charts, last 1 month, the stock has been deeply under pressure, same for 6 months. However, on a year-to-date basis, the stock has seen a roughly 30-35% return, but last 3 months, like I said, the stock has been under pressure, and last 6 months or so, the stock has been giving consecutive negative returns. Tell us what's the outlook that you have for this stock going ahead, and do you see some type of reversal for the stock on the charts ahead?
It would be too early to take that call whether the stock is around its major support and is likely to reverse or not. In fact, the stock is challenging its recent swing lows of 310, and in fact, if you take a glance at its price action in last 12 months, the stock has not been sustaining below 200-day simple moving average for 2 consecutive days, and this is what's been happening. Today also the stock is below its 200-day simple, and on Friday also for the entire day the stock was trading below that important moving average. So this clearly shows the inherent weakness in this counter. So till the time this stock does not surpass 330-35 on a closing basis, we are likely to see some selling pressure at higher levels, and once this stock breaks down below 310, we can see the stock sliding towards 280-85 in probably a couple of weeks.
All right, moving on then from Power Grid to Bajaj Auto. Now, there's a note by Investec on the Bajaj Auto's new launch, new Chetak 3502, that is priced at 1.2 lakh rupees. Now, they feel that there's a sharp fall in the cost of production for the new EV two-wheeler. But the cost of production of the newly launched, 250 Bajaj Chetak series is 45% lower than the earlier models, and this coupled with the PLI benefits should aid in significantly as far as improving profitability is concerned for the company going ahead and gaining market share in the EV space as well. So on the back of a positive note, Bajaj Auto is in focus today, has given up those morning gains, is currently trading flat with cuts of 0.1%.
Okay, so that's the take on Bajaj Auto, but let's also go across and listen into Gautam Duggar, Head of Research Institutional Equities at Motilal Oswal, on what his take is on the entire auto space, what he's making of the numbers that we've been seeing recently from the auto space, and what's the outlook going ahead.
If you look at auto performance in terms of earnings in Nifty, between FY21 to FY24, the auto earnings in Nifty went up from 20,000 crores to close to 60,000 crores, which is a very strong performance on a low base. So we are expecting the margins to normalize now in FY25 second half as well as FY26. And we were expecting single-digit earnings growth for auto in FY25. And telltale signs of that were visible in the monthly numbers of both two-wheelers as well as four-wheelers, which is when we downgraded auto to underweight in July. And we only have M&M and TVS in our model portfolio.
All right, coming back then, Sameet, you picked out BHEL for us. Now tell us what are the levels that you're penciling in on the counter for this one? I mean, if I look at the chart, even in the last 1 month, it hasn't really done much. In fact, in the last 6 months itself, it's been in a corrective phase. Tell us from here on, does this really pick up?
Showing some, respite in today's session. In fact, on Thursday also we saw the stock giving a good recovery from low levels. Although the fall has arrested for this particular counter, we may see some sort of time-wise consolidation. Where on the higher side, 255 to 60 would act as a very strong resistance, and the decisive breakout beyond 255 to 60 would confirm this short-term bottom, and then the stock can head higher. But as of now, we expect consolidation to continue for 255 to 60 on the higher side, and 230 is the important level to watch for.
Okay, those are the levels and the view coming in on BHEL. Let's move away from that, talk about Greenply, because they had their management meet and Investec has come out with a note from the key takeaways from this management meet. They've maintained their buy rating with a target price of 420 rupees per share, which is significantly higher than where the stock is trading right now at 316. Now they say that the company expects minimal impact on sales from the Gujarat MDF plant shutdown that's happened, and they also remain hopeful on the furniture fittings joint venture ramp up that the company is undergoing right now, with the FY25 target at rupees 1 billion, which translates to rupees 100 crore, and expects facility eventually to deliver up to 800 to 900 crore rupees annually. So those are some good targets that the management has flagged off. Investec is liking this as well. Maintained a buy rating, target price of 420 rupees per share, and Greenply Industries not doing much but nonetheless in the green with gains of more than 0.5%.
All right, moving on from Greenply to Indian Oil, Gaurav, that's what he's picked out for us. Tell us what's the news flow here.
Oil is in focus, and the reason being that now board has accorded investment approval for setting up a yarn project consisting 900 TPD continuous polymerization units with the downstream unit at an estimated cost of around 4,382 crore rupees. This is going to happen through a joint venture with MCPI Limited. Now, Indian Oil's equity contribution in this entire project is going to be around 657 crore rupees. And at the same time, there is another news flow which is coming. Earlier in the morning, we saw some news flow which was coming against Indian Oil that this company is involved in some kind of penalty imposed by USA on the bribery case. Now, company has come up with their clarification. Company said that the company is neither a party nor is there any allegation against the company, although they are actually has initiated internal fact-finding review concerning the incidents which allegedly happened in 2009. But overall, when we talk about the news flow and a positive news flow coming up for the company because of the new project that they're going to open, and with this we are seeing the company trading with a gains of around 0.8%. So definitely watching out on Indian Oil.
All right, that's Indian Oil in the news. Well, moving on to Vishal Mega Mart that debuted on bourses a few days back. It had a strong listing of almost 41% on the bourses over its issue price. Now today it's back in news on the back of a block deal coming in. Nomura India has acquired 3 crore shares of Vishal Mega Mart that's worth 325 crore rupees in a block deal. And on the back of that, Vishal Mega Mart is in focus today. It has currently given up the morning gain, but it has recovered from the day's lows as well. Currently, it is trading with gains of more than 0.5%.
Okay, that's the news on Vishal Mega Mart. But while we're talking about the entire consumption space, fast-moving consumer companies in the country are raising prices of some of their products, ranging from soaps to coffee. While surging input costs have driven pricing of final goods through 2024, the pressure for the price hikes has mounted on producers in the recent past amidst soaring costs of underlying commodities. You have palm oil alone that has surged 40% on a year-on-year basis, so that's something that has been ailing all of these FMCG companies. Astha Chopra, my colleague, reports on the same.
Rising costs of key raw materials such as flour, cocoa, coffee, and palm oil are pushing FMCG companies to increase the prices of the products. Britannia implemented a 3% to 5% price hike in biscuits and cakes, with further hikes anticipated in fourth quarter. For example, Godrej Consumer is focusing on passing the price hikes more towards the larger packs. On the other hand, companies like Godrej Consumer Products have a too prolonged strategy of lowering the grammage for some soaps packs. The company is also planning to raise prices in the soap category. Parle Products introduced an average price hike of 5% to 7% across its product portfolio. Also, HUL is planning low-digit price increases.
Inflation's been real, whether it's in the flour, and the big one that's really came as a surprise. Cocoa prices have gone up, as you know, but the big one that came as a surprise was the entire duty increase that's happened on the palm oil by 25%, which has actually led to a 40% increase in terms of pricing. Some bit of price increase inevitable, and we've taken some steps already in that direction in quarter 3, and some more will happen in quarter 4. There will be shrinkflation in some packs, but mostly the large packs are the ones where we've taken the bit of absolute price increase as well.
The FMCG sector is grappling with rising raw material costs. Cocoa price spiked in April due to crop shortage in Ghana, while flour prices rose by 10% in August. Palm oil prices have also surged, driven by supply disruptions from floods in Malaysia and Indonesia's increased export taxes. The landed price of crude palm oil has now reached to $1,275 a ton.
We don't pass on everything to consumers all at once. So quite a lot of it we absorb. Judicious step-by-step price increase. We're trying to move our portfolio to faster growing categories. We announced a few months ago that we're entering pet care.
Coffee firms raised prices through 2024 amid soaring costs of beverage commodity. Nestle and Continental Coffee are among those companies that have hiked prices of instant coffee brands. Raw material costs of Nestle rose by 25 to 30% and CCL 15% to 25% this year. Both Nestle and Continental Coffee lowered the grammage for its smaller sachets. For the 2 rupee sachet, Nestle cut the grammage to 0.9 grams versus 1.2 grams at the start of year 2024. Nestle increased prices for Nescafe brand 4 times this year, the newest in December. CCL Products, that markets the Continental Coffee, hiked their prices by 15 to 25% this year. In Mumbai, this is Astha Chopra for ET Now.